Good morning, everyone. Tim Nyland here. This is October 7th, 2020, and this is our weekly strategy call for Zacks Professional Services. And again, a little bit of a different format this week. I think you'll all find this very, very enjoyable. And it basically originated from me going through a stack of Wall Street journals for probably the last 10 days or so. And I was basically looking for stories and talking points that we could elaborate on individual stocks, maybe ECP holdings, maybe do some deep dives into some valuations. But what ended up hitting me was all of the information about the election. And as I was going through Wall Street journals from day to day, and even sometimes within the same actual issue in the same day, I was seeing stories that were conflicting one another, and I started putting myself in the shoes of a financial advisor and started thinking to myself, wow, how would anybody really make sense of this stuff just reading the Wall Street Journal and obviously getting bombarded with the rest of the media? And so what I did is I cut out 5 of probably some of the more predominant articles that I read, and then I actually put together a one-page document that's going to serve as a 2020 Election Uncertainty Playbook for everyone. And so this is going to be something that you can request after you've seen the webinar, and we'll go ahead and email that PDF document out to everyone. So let's go ahead and get started. The first article I ran into was regarding the Biden tax plan. And in bold down here, there's obviously a lot of written portion. I didn't have room to scan it all, but it said that it would more or less hit tech in bold. And if you read the article, it goes on to say that obviously information technology is a big one, but also a lot of the consumer names and discretionary communication services, even staples, healthcare, some of the largest market leadership is obviously at risk. And if you think about it, this kind of makes sense, right? Because this is where the growth is at. These large profitable companies end up paying more in taxes, tax rates go up, they get hit. So the idea here is that you've got these consumer names in communication services, consumer discretionary, and information technology making up, the bulk of the larger portion of taxes being paid in the S&P 500. This chart here specifically speaks to the estimated earnings reduction from the Biden tax proposal. So overall, you're looking at roughly a 9% earnings reduction in the S&P 500, and you can see information technology and the consumer names and communication services, how that's kind of rolling up. There's really not going to be many sectors unscathed here. So it's not just tech. That's really kind of the takeaway. And the interesting thing is in another article, they talk about retail and housing offering shelter from the election storm. And they really talk about consumer stocks, right, being expected to perform well no matter who wins the White House. And, I would probably go a step further and say that equities in general are liable to perform well, just getting the event of the election behind us. And I think the real shocker would be, if there is to be a shocker outside of there being some sort of stalemate or challenged election where we have to have the Supreme Court intervene, would be if the Democrats are actually successful at sweeping the Senate. I think that would be probably the larger shakeup. And in terms of the election itself, I think that when you look at Trump and you look at the record that we have with Biden and Harris, I think that these are really well-known factors. And I think that the market has become more than comfortable with a Biden win. So again, we start talking about, which stocks are expected to weather the storm. If you read all these articles, and if you're an earnings certain portfolio investor with us at Zacks, you'll quickly realize that the earnings certain portfolio is literally the portfolio to be in during these types of uncertain times. It's literally what the portfolio is designed for. Here's another article that I ran into that I found to be interesting. Obviously we did have a little bit of a performance give back last month with value stocks actually beating growth. This article goes on to say that it's some sort of shift taking place, and I would just be really, really cautious when I hear anything in terms of a shift. Right? We've had a lot of significant outperformance from growth, and you can see this going all the way in this chart, going all the way back into 2019. And I think that it was fair for growth to maybe give back a little bit. The interesting thing is that the Russell 1000 value also declined. So as far as there being, some sort of takeaway that we've got this shift in value beating growth, I would say that it's fair that value has been so beaten up that perhaps it just didn't decline as much as what growth gave back. So again, it's really hard to draw conclusions based on the election as to what's going to happen with value stocks versus growth stocks. Certainly the growthier names, they're going to be paying a lot more of the taxes perhaps. And if there is going to be a Biden victory and they are successful at actually passing tax code legislation, the question is, when does that actually take place? And does it actually trigger a value rotation or somehow help the value rotation? And I think that there's just so many factors at play, including what's going to go on with the Senate, that we really just have no idea. So that's just something to be aware of. And we're going to wrap all this up here in just a minute with the one pager and review it. This particular story here really, really resonated with me and is probably one of the larger overriding factors to the election that people don't even really give credit to. And that is that treasuries have more or less lost their status as a safety net. And what they're showing here is the fact that the 10-year, basically since the COVID collapse, has literally just been sitting stagnant. And it's because of, obviously, the Fed intervention that we needed to basically rescue the economy. And obviously that actually lifted the stock market, but did nothing in terms of any sort of recovery in treasury yields. And obviously a large part of that is the messaging that goes along with that. The Fed's going to, keep near zero rates for longer, probably spanning into 2022, if not 2023. The interesting thing that about this particular article is that it talks about the tips and how the yields themselves have been on the decline because obviously inflationary expectations are starting to rise. So that's really interesting. The more interesting thing to note is that with regard to treasuries losing their safety status, it really puts the focus on equities now and alternative assets. So anything from, currencies, it could be any number of other alternative assets that now investors, including gold, are looking to bring down their correlations in their portfolios in order to provide that diversification. So that's a really large overriding, I think, is being missed. And this article kind of nails that. I was really happy to see that. So all of the reading that I've done here, and I'm kind of giving you my thoughts. And this, again, we're going to make this available to anyone who requests it. You can send an email request into the ZAT@Zacks.com or ZRS@Zacks.com, or just reach out to your account manager or your sales representative. But this is the 2020 Election Playbook, specifically the Uncertainty Playbook. And again, here's what we know, right? Trump and Biden, as I mentioned, they're both known factors in the upcoming election. Wall Street and the market, I believe, remain comfortable with a Biden victory. We know the Joe Biden proposed tax changes. He's been very vocal. And this is what's been written about, right? Tax plan proposes corporate tax increase from 21 to 28%, imposes new minimum tax on U.S. companies, and then increases tax on foreign income of U.S. multinationals. So this not only hits technology stocks, a lot of the stocks that we have in the earnings certain portfolio are obviously some of the largest multinationals as well. So this literally spans every sector, every strategy. It's really tough to avoid sweeping tax reform. Okay, but here's some tidbits on the impact of these tax changes and some things to think about. It's definitely expected to reduce S&P 500 earnings by about 9%. And the tech sector actually has about 44% of revenues derived from the U.S. versus 60% from the overall S&P 500 in aggregate, and that would include technology. So the S&P 500 technology sector obviously getting a lot more of its revenues from overseas. Consumer discretionary, communication services, staples, healthcare sectors, they're also exposed. Like I said, nobody's getting away from this. Growth-oriented sectors will pay more because they obviously make more. So what is the short-term impact to investors? We might have some. I put in here a maybe, and we're going to elaborate here on that in just a second. But longer-term impact to investors is probably not much. And a lot of that has to do with perhaps the fact that a lot of the growth that we're expecting to see in the economy, and you could argue it come from the stimulus, either fiscal, it could be anything related to what the Fed is doing, or even the plan that Biden is proposing. Perhaps that works. So the idea is long-term impact. If Joe Biden gets elected, what's the impact to investors? Not likely. Same thing if Trump remains in office. So I'm elaborating here on the maybe things to consider when evaluating short-term impact to investors. A Biden victory may help the value rotation. Just keep in mind that value stocks are cheap for a reason, and you have to ask yourself, will higher tax rates in the near term actually help value stocks grow that much quicker? And I would argue not. The Biden campaign is also citing a Moody's Analytics piece that concludes that Biden's plan would lead to growth and job creation. And again, I'd already mentioned this just a minute ago, but you have to ask yourself the question, will this be enough to soften the blow of the tax rate increase? We just don't know. Tax rate changes in the near term are not likely even if Biden wins the election. And this is the big one. And this bullet point here is probably the largest, could be the largest shocker of all in the election. And that is unless the Democrats also take control of the Senate. So again, tax rate changes in the near term are not even likely if Biden wins. And the reason for that is if we have further economic downturn from COVID-19 or any related issues, it could delay changes to the tax code, even if Biden wins and Democrats end up sweeping the Senate. So a lot of unknowns, right? So fiscal stimulus could actually increase with a Biden victory. Again, another unknown. Federal Reserve has implemented, obviously, the easing policies that have the Treasury yield locked in a tight range, and this is probably going to go on for several years. So this is where we're now shifting our focus to that more macro important policy on the macroeconomic risk perspective, and that is the fact that a 60-40 stock bond allocation probably suffered one of the worst monthly losses back in March since we've seen since the 1960s, 87, and 2009. So the idea that equity markets have since recovered, but Treasury bond yields haven't moved is probably the larger story here. The idea is that in the next bullet point, right, bond yields are now struggling to cushion the blow to equity market declines. There's going to be more focus than ever now on gold, currencies, and other alternatives as hedging instruments, while equities are going to remain the favored asset class. I really don't see this changing anytime soon. That, and we've got literally trillions in cash sitting on the sidelines. And the idea is once we get this election noise behind us, is that cash going to be finally deployed into the markets? And what will that actually do to asset valuations? So the moral of this story is, be aware of these issues, but don't panic. There are so many other factors that need to be determined. It really is almost impossible to predict with any certainty how this is all going to play out. I believe equities still remain the favorite asset class, and growth is definitely not going to go out of style anytime soon, even if corporate taxes do increase. We might take a little bit of a hit in the near term, but again, long-term impact to investors, like I mentioned here, is really not likely. So again, that's all I had for today. I just wanted to elaborate a little bit more on the election piece that I mentioned in my prior webinar last week. So hope you found this beneficial, and please, again, reach out to us if you'd like a copy of this PDF. Thank you. Talk to you next week.